Hello and welcome back to the Geordie Pig Investor channel. Today we are going to be having a look through, is Realty Income stock a buy right now? What is Realty Income? Stock ticker O. Realty Income is a real estate company which engages in generating dependable monthly cash dividends from a consistent and predictable level of cash flow from operations. The firm is focused on acquiring and managing freestanding commercial properties under a long-term net lease agreement. The firm owns and operates a diversified portfolio of over 11,000 commercial properties. The firm's properties are leased to clients operating across 60 industries and located in 50 United States, Puerto Rico, the United Kingdom, and Spain. The majority of its properties are leased to retail clients that have a service, non-discretionary and or low price point components to their business. The company's property types include retail, industrial and agriculture. Some key stats about Realty Income is it's based in the United States. It is in the real estate industry. It has a market cap of $49.6 billion. It went public in 1994. Currently has over 360 current employees. Has a dividend growth streak of 27 years. Has a 5-year dividend growth rate at 3.55% and has a dividend yield at 5.53%. Their 1 month performance, as shown on the graph, it is currently down over 10%, and that is why we're going to have a look at, is Realty Income a buy, hold or sell right now? Realty Income, earnings call and fundamental analysis. O's third quarter results reveal steady growth with AFFO per share rising 2.9% to $1.05. The company raised its 2024 investment volume guidance to $3.5 billion, showcasing strong market momentum and a robust $1.3 billion planned for Q4. Notably, the firm achieved a 105% rent recapture rate on lease renewals, affirming its resilient portfolio. Despite external challenges, Realty Income maintains a focus on diversified investments across retail, industrial, data centers, and gaming. The establishment of a private capital fund aims to expand its investment reach, potentially enhancing long-term growth and stability, while alleviating reliance on public equity. Realty Income's portfolio maintained a high occupancy rate at 98.7%, albeit reflecting a slight decrease from the previous quarter. Rent recapture efforts proved effective with a remarkable 105% on 170 renewed leases, as mentioned just before, collectively generating approximately $38 million in new annualized cash rent. Such performance emphasizes the company's strategy of active asset management and its ability to fortify cash flow. The company has also expanded its access to capital through recent bond offerings totaling $1.2 billion, enhancing their financial flexibility. Fundamental analysis. They have an exceptional 1-year revenue growth at 29%, also an exceptional 3-year revenue growth at 40%. They have positive operating income at $2.2 billion, positive gross profit at $4.6 billion, positive net income at $866 million, very good long-term and short-term solvency. They also have very low debt to equity at only 0.68, average interest coverage at 2.92. They do have a low Altman Z-score, only 1.11, and a positive net debt at $25.7 billion, but this is to be expected for any sort of REIT because they have to pay back at least 90% of their money into the company back to shareholders through dividends. Having a look into Realty Income's discounted cash flow valuation, the DCF is a method of estimating the current value of a company based on projected future cash flows adjusted for the time value of money. The DCF valuation process calculates the present value of a company's forecasted cash flows based on selected operating models. Their current price is $57.12, and when plugging in my numbers of an 8% discounted rate and a negative 3% terminal growth, we can see that O would be worth $14.93. When plugging in a discounted rate of 7.7% with a terminal growth rate of 0%, we can see they were worth $26.06. And when plugging in a discounted rate at 7.3% and a terminal growth rate at plus 3%, they would be valued at $55.21. I not only look at the DCF valuation, but we also look into something called the relative valuation. Relative valuation is a method used to value a company by comparing it to other competitors based on certain metrics. The metrics it includes is EV to revenue, EV to EBITDA, and also PE ratios. When plugging in my numbers to look at what Realty Income's relative valuations come out as, on the worst case scenario, we can see that O would be worth $83.61. On the base case scenario, they would be worth $93.80. And on the best case scenario, they'd be worth $104.94. Once you've received both of these valuations, we can then come up with something called the intrinsic value. The intrinsic value of a stock has been used for many years to calculate the stock, and it is easily calculated by adding the two together and dividing by 2. This has been used since the early 1990s by many very, very well-known investors when valuing companies, hence why I use this in my current valuations. On the worst case scenario, Realty Income would be worth $49.27. On the average case scenario, they would be worth $59.95. And on the best case scenario, they would be worth $80.07. I not only look at the intrinsic value, but I come up with a third valuation method when looking into a company, and that is the Wall Street estimates. The Wall Street estimates are an average estimate of a public company's quarterly earnings and revenues that lead to a valuation of that particular company. These numbers are forecasted by a company-specific analyst who provides research on that particular company and therefore comes with what they believe is an accurate valuation. There are multiple analysts for mid to large cap companies, so this further backs the accuracy when pricing the companies. On the worst case scenario, we can see that O would be worth $58.58, which is a 3% upside on the current price. On the average case being worth $66.43, which is a 16% upside on the current price. And on the best case scenario being worth $75.60, which is a 32% upside on that current price. Once I have got my three valuations, I can then combine them to come up with my final worst, average, and best case scenarios. On the worst case, O is valued at $52.37. So with a 10% margin of safety, you'd be looking to buy at $47.13. And with a 20% margin of safety, you'd be looking to buy O at $41.89. On the average case, it was worth $62.08. So with a 10% margin of safety on this price, you'd be looking to buy at $55.87. And with a 20% margin of safety on the average case price, you'd be looking to buy at $49.66. And finally, on the best case scenario, they were worth $78.58. So with a 10% margin of safety on this price, you'd be looking to buy at $70.72. And with a 20% margin of safety on the best case price, you'd be looking to buy at $62.86. Well, is Realty Income currently a buy? I think the company is trading around fair price. Going forward, Realty Income is focused on leveraging multiple growth verticals, including retail, industrial, and emerging sectors like data centers and gaming. The diverse portfolio not only secures stable cash flows, but also positions the company to capitalize on evolving market trends. As the fourth quarter approaches, the leadership remains optimistic about continued investment opportunities, with confident projections of maintaining healthy returns on new acquisitions. Their consistent dividend growth streak reassures all shareholders and reminds them just how reliable they are. And to add to this, they also have that very attractive 5% yield, as well as their company paying out on a monthly basis. At the current price, it may not be quite where I'd be considering to add more to my position, but closer it gets to $50 and can't ignore the value that's to be potentially had. Do you currently own O in your portfolio? I know it's one of the stock staples in a lot of dividend-focused investors' portfolios, and it is actually currently in mine, but not one of my bigger positions. Let me know in the comment section down below. I hope you enjoyed today's video. Please let me know of any other stocks you want to see a full breakdown on. Thanks for watching. Please like and subscribe. This is the Geordie Pig Investor. Over and out.